All right, welcome back to our Basic Legal Concepts series. This is where us as attorneys are explaining some basic legal concepts. We're not giving you legal advice. We just want to give you some general information about these terms that you might hear. S-Corps, what are they? Why are they so popular? Why does everybody want an S-Corp? An S-Corp is a kind of a hybrid between a corporation and a disregarded entity. A disregarded entity is where the IRS just treats it as an extension of yourself as a personal taxpayer with some additional protections for liability. An S-Corp is the same thing. It's still disregarded. All the income flows through to you as an individual. You're not paying corporate tax, but you get a few more advantages. But you also have to file what's called an 1120-S, which is an S-Corp tax return. So the administration is a bit more complicated and a bit more expensive. That's something you want to think about before classifying yourself as an S-Corp. You want to have the CPA and accounting and bookkeeping team in place because you do not want to be on the bad side of the IRS. What is the biggest advantage of an S-Corp? The reason it's so popular is because if you're working as an entrepreneur and you have, let's say, a disregarded LLC or a partnership, all that income is flowing through to you as an individual and you're paying taxes on it, but you also have to pay something called self-employment tax. The IRS charges employment tax on everyone. So if you're working for a company, your company pays half of that for you. They're deducted in something called withholding from your monthly or biweekly or whatever your paychecks are. You're going to see an amount taken out of that, and that's the company taking that out for withholding. If you're working by yourself, you have to pay all of it. The company doesn't pay any on your behalf. And the other problem is, if you're in a disregarded entity, all the income is subject to self-employment tax. Not just part of it, all of it is subject to that. So if you're making a lot of money as a disregarded LLC or a partnership, then all of that is going to be subject to self-employment tax. The S-Corp advantage is you can take a salary from your S-Corp that has to be commensurate with what someone in the regular field would make as a salary. So if you're cleaning dishes, you can't pay yourself $1 million a year. You have to pay yourself something that is reasonable for what someone would make in that field. And then the advantage is you only pay self-income tax on that salary. The rest of it, you don't have to pay any self-income tax on. Huge advantage. It's very popular to people because they see the tax benefit in the short term. What's the downside? The downside is it's harder to sell. It's harder to move assets outside of that entity because when you have an S-Corp, you've established a separate corporate entity and the IRS still treats it kind of like a corporation. So if you want to move assets out of it, if you want to sell your equipment, if you want to sell your intellectual property, it's considered a sale. And when you move those assets out, you have to pay taxes on that sale. So it's a lot less flexible and it's a lot more difficult to deal with, especially if you're thinking about selling your company in the future or doing mergers and acquisitions or doing other types of transactions. An S-Corp is good from the self-employment tax perspective, but it's very difficult to deal with from a future sale and exit strategy perspective. You just have to weigh the pros and cons. The IRS is going to get their pound of flesh either way. So that's an S-Corp.